Welcome back. You're still tuned into Mid-Cap Radar on CNBC TV 18. Well, the stock on our radar is Mahindra Lifespaces. The company's arm, Mahindra World City Developers, has announced second phase of its industrial parks project in Tamil Nadu. This is in partnership with Sumitomo Corporation, Japan. Amit Kumar Sinha, the Managing Director and CEO of Mahindra Lifespaces, is joining us now to take a few questions. Amit, good afternoon. Thank you so much for joining in. Can you give us a sense of what the shareholding will be in this phase? This is phase 2 of the project. What kind of investments will you be making in this? Because it is basis the equity shareholding that you have here.
Thanks for having me. So we already have a partnership with Sumitomo for phase 1 of our Origins Chennai Industrial Park. The shareholding currently is 60-40. For phase 2, this will continue to be the same stake. So we'll have 60%. Sumitomo Corporation will have 40%. And that's the deal that we have signed to expand from phase 1. We go to phase 2. So that's the shareholding. In terms of the investment, there are two kinds of investment. The first is the initial investment, as we are doing finishing the land acquisition. For that, we have earmarked 225 crores. It will be in the same ratio as our shareholding. And there will be significant additional investment that will happen during the development of the industrial park as we do the infrastructure, roads, STP, all the other relevant infrastructure that are required for any corporate MNCs to actually establish their industrial establishment into these parks. So that will be significant over the next few years. But the initial starting point is 225 crores.
Got that. Amit, give us a sense now, while you are developing this particular industrial park, do you already have tie-ups? What are the kind of rental agreements that you have in place with, are any of the existing clients also setting up shop over there? And can you give us a sense of what kind of annuity you can expect from this particular industrial park 2 that is being developed?
Yeah, so it's slightly different business. Let me just explain. These are not rental incomes. These are called lease income, but they're actually perpetual leases. So it's considered as a sale. So from that point of view, you don't have an annuity income. We have a small annuity income that comes through the O&M business. We maintain the parks. So that comes as the annuity income. But we have a very, very healthy pipeline. Origins Chennai has attracted one of the largest set of investments from Japanese clients. Last year, Mitsubishi, for example, decided to put their largest factory in Origins Chennai, roughly $220 million investment along with the land investments. Similarly, we have a very healthy pipeline from Japanese and non-Japanese clients. And that's why the partnership with Sumitomo is extremely important for us. So that will get translated into lease revenue, which is a one-time, let's say, sale revenue. But the rental income that you refer to is actually the O&M revenue, which is based on a case-by-case basis, which is much smaller, but that allows us to collect that O&M or CAM charges in residential equivalent terms that comes to us on an annual basis.
So what is the number to that, Amit, these rentals or the O&M charges that we are talking about, or do you decide it before you let it out? And the second thing is the commercialization date. By when do you commercialize this phase 2 completely?
Yeah, so the approval process has started as we have concluded land acquisitions. Obviously, this goes through 2 rounds of approval. First is the master layout, and then the specific to the client. So that process has started. It typically takes 6 to 9 months to get approvals, and in the same time, we are able to attract companies to come and do the due diligence on the land, what kind of construction they want to set up here. All those things happen concurrently. We have a very healthy pipeline. The commercial numbers are a little bit confidential at this time because each client is very different. The kind of land, the kind of support services they require. So we'll be able to share those as those deals conclude. But at this time, they are currently in the pipeline stage. But as we have done in the past, whenever a deal concludes, we share all the details.
Amit, we get that, and we take that point on board. Could you give us a sense, typically we are understanding that different clients will have different requirements in terms of the square foot, for any kind of commercial establishment or in office spaces that you're putting up. So could you give us a sense of, how are land rates trending over there, which will help us go ahead and analyze the kind of income you would get. And number two, you also have one large project, number one in Chennai itself, and also in Jaipur. So any extension or any expansion you're seeing over there?
Yeah. So let me just cover Chennai and the commercial point. I think you're right. The lands are typically sold on an acreage basis, like so per a client will have 5, 10, 15, 20, sometimes even larger, like Mitsubishi was 50 acres plus, right? And the location and all those things, the pricing can go from anywhere from, let's say, 2 crores to 5 crores an acre. And this is net area, so not the gross area. So that's depending on the location, infrastructure, and all those things. So that's where and we publish that as part of our analyst report every quarter. So you have all the details there. Jaipur is an exciting location for us. That we have roughly 3,000 acres of land, 1,500 acres in SEZ, 1,000 in DTA, roughly 500 acres in the social. We are very heavily utilized on the domestic side. We have more opportunities for clients who are looking for SEZ space, but that location is very close to NCR, as you know. So it has a lot of exciting clients, exciting opportunities that we are offered to Japanese and any other clients. So Japan is a big part of our focus in Origins, but in Jaipur, it's any client that's interested in setting north as a frontier for their market consumption.
Okay. All right. Amit, your leasing revenues, they have more than trebled in the first half versus last year. With this project coming in as well, the O&M annuity that you're talking about, what is the outlook on the leasing business overall? What do you plan to end this year with? And with this project also getting commercialized, what will FY26 look like?
Yeah, so we have been very cautious about giving, the exact guidance on these numbers. The reason is very simple. These are very lumpy deals. They are large deals, which happen, and sometimes it's not exactly limited to the financial year that we report our results. But typically, the kind of locations we have, the kind of demand we have hovered around if you see the last year and this year, last 2 years, around 350 to 450 and 500 crores per year. This typical industrial leasing revenue and O&M revenue combined together across all our locations, which include Chennai, Origins, Jaipur, and a few other small locations. So all of them is a healthy business for us as part of our Mahindra Lifespaces industrial business.
Amit, a two-part question, one just to get this out of the way. A lot of your peers have actually looked at monetizing, the commercial part of the business via REIT. Is that something you will look at? And number two, you've guided for close to 8,000 to 10,000 crore of booking guidance as far as FY28 is concerned. Will this largely be organic, also looking at inorganic growth? Any more land acquisitions, any more JVs that you're targeting?
Yeah, so I think there are two parts to that guidance. Let me answer the second part of your question. So 8 to 10,000 crore is primarily coming from residential. Let's take the midpoint, 9,000 crore. So our estimate is that 8,500 crores should be our residential pre-sales, and roughly 500 crores would be from the industrial side. And that's how the business we are building. You may have seen some of our recent announcements in the first half or in the last 7 months of this year, including the announcement of large JDA that we did in Bhandup. This is a very large, close to 3.5, 3.6 million plus almost 4 million square foot. That will be mixed use, residential, commercial, and retail. And we had done a few others in the early part of the year. So we are consistently growing our residential business while we are maximizing value creation from our industrial business. To your question about REITs, we are looking at ways to do, raise funds. REIT an example of it, but they are more relevant for commercial, where you have rental revenues, rental annuity coming in. But for residential, you are looking for platforms, some kind of QIP, preferential. All those are part of our options that we look for providing the capital for growth.
Okay, all right. Amit, thank you so much for joining in with all those details. The street likes what you're talking about. The stock is spiked to the day's high. We'll watch out for the execution and the outlook going forward on Mahindra Lifespace Developers. With that, we'll slip into a break. When we come back, we'll talk more about markets and stock-specific action on the other side. Stay tuned.